So you found the perfect lot, you've got a design, the vision, the plan, but now you're probably wondering, how the heck do I pay for all this? In this video, we're diving into the world of new construction loans, what they are, how they work, and what you need to know to fund your dream home. And I'm bringing on a heavy hitter, Ed Currie, a mortgage expert who specializes in new construction financing. And trust me, you're gonna wanna hear what he has to say. If you're new to the channel, welcome. My name is Rafael Velasco, aka Rafael the Realtor, and in this video, we will cover everything you need to know about financing your new construction project. If you caught our first episode in our build series, you already know I'm building my own custom home right here in Downers Grove. I broke down the lot I bought, why I chose it, what I plan to build, but there is one big part of the puzzle we still haven't talked about yet: financing. Because building from the ground up isn't like buying a finished home, and if you're not careful, it's easy to get overwhelmed by all of the moving parts. Before we bring on Ed, let's break down the basics of how new construction financing actually works. Unlike a traditional mortgage where the home already exists, a construction loan is designed to fund your project while it's being built. It's a short term, usually 12 to 18 months, and it's paid out in stages as your builder hits certain milestones. Think of it like unlocking funds step by step as the house takes shape, from foundation, framing, mechanicals, and so on. During that time, you're typically making interest-only payments on the money that's being drawn. Then, once the home is already built, most people roll that loan into a standard long-term mortgage, which is when the traditional monthly payment begins. Here is basically how it works. You get approved upfront. The loan pays out in stages called draws as the construction progresses. You only pay interest on the money that is drawn, and when the build is done, it converts into a regular mortgage. It's a powerful tool, but the process has a lot of moving parts, which is exactly why I wanted to sit down with someone who does this every single day. To help break down how construction loans really work, I reached out to someone who has literally seen it all. Ed Currie is a certified mortgage planner and one of the top construction loan experts in the country. He has been originating loans since 1994 and has closed over $4 billion in mortgages, including more than $3 billion just in construction loans. Ed knows exactly how to navigate the process, avoid costly mistakes, and make sure your loan actually closes, especially when you're building from the ground up. So let's bring him in and get some answers. Hey Ed, well, thank you so much for joining us today. It's a pleasure to have you.
Thanks for having me, Rafael.
Thank you. Hey, so right off the bat, Ed, let's go over the different construction loan options for somebody that's looking to buy a new construction home.
Yeah, I think probably right off the bat, you probably should clarify the difference between owner financing and builder financing. You know, builder financing construction loan would be somebody that's going in and a large builder who might be building hundreds of homes in a neighborhood, and they're gonna construct a home for you. Some people look at that as a construction loan. The reality is that builder finance loan is going to be something where they're going to handle all the financing on that project. You're going to have to give them a nice big deposit, and then you're just going to come in with a regular loan at the end. So really, for the purpose of the discussion today, we're really talking about owner financing, where the owner who is going to be building their primary or secondary home is going to get a loan to build that home. They're going to carry the financing. They're going to pay a interest-only payment during the construction phase, and they may have already purchased the land or the property and then just get a loan for the construction loan, or in some cases, it's an all-in-one package. Some cases, they might have a builder that has both the land and they're going to build with. So that's the type of owner, so-called one closed construction loan program that we'll be talking about today. And for the most part, you've got one close versus two close. The two close I like to call the old school loan. And that tends to be with banks and lending institutions that are smaller, and as opposed to a larger regional bank. And so that's going to be a scenario where it's going to be a 12-month term. You're going to pay an interest rate. A lot of cases it's going to float with prime. and you're at the end of that 12-month term, you're going to have to refinance. It's going to balloon. So you need to do a new loan, new financials, new appraisal, and then lock into your interest rate then. As opposed to the one closed construction program, which is something that we do and I think is superior because that eliminates some of the unknowns down the road. On the one close, you're going to use that both for the construction phase and after construction's complete, what we call a permanent phase. And the only difference is you pay interest only during the construction phase. And then after construction, the only thing that changes is the payment goes from interest only to principal and interest. Same program, same rate that you locked in up front. You're not required to refinance. You're not required to give new financials, new appraisal, lock into a new program. So the benefits there are at the end of what's called a 12-month construction phase. If something happens to your financials, maybe your credit score drops, maybe you've switched jobs. Classic one is people go self-employed and start a new business. Now you can't use that income. Maybe the value is dropped on the appraisal. All those things open you up to risk on the two-step because you may have to put in more money or you may not be able to refinance. So the one closed construction program does give you that option to be able to stick with the program that you started with, but also gives you the option to refinance after construction is complete as well. If rates are elevated and rates come down at the end of the construction phase, you can stay in that loan or you can refinance to a lower rate. If rates are higher, you can stick in that for a period of time. So we saw that a lot around 2018 where rates were higher. 2019, they just started to come down. So in 2019, we saw a lot of clients that stuck with their loans. And then, of course, 2020, 2021, rates plummeted. And then we saw all those people from about 2-3 year period just loaded up on refinancing bills.
That's awesome information. Thank you so much for sharing that. I also wanted to mention and ask you, what are the most common misconceptions new construction buyers have when they approach you about financing their new construction project?
Well, for the most part, most people come to the table thinking that they're very hard or difficult to get. And on its face, I can understand that because a new construction loan, there's a lot fewer places that do them. Banks working, the construction loan is one program that is beneficial working directly with a bank because they are going to do the loan, they're going to fund the loan, and they're going to hold on to the loan, as opposed to like a regular 30-year fixed loan where banks are going to close it and sell it off to Fannie Mae or Freddie Mac. So because of that, there's a lot fewer institutions that do construction loans. Then, of course, within those institutions, there's only a few people that are actually good at doing them. So a lot of times clients are looking and seeking out multiple recommendations because they just can't find a good source. Certainly their builder, if they're working with one already, probably has a source. But for the most part, because of the limited supply of good construction loan providers, the perception is that it's more difficult to get. But the reality is if you're working with a good loan officer who does a lot of construction and that is their focus, it really should be no more difficult than a regular loan. Documentation is primarily the same except for plans and budget. The guidelines are pretty much the same. So everything should be pretty similar except for the fact that you just need to make sure you're working with the right person.
Very good. And what should someone expect to need as a down payment?
For the construction, the custom construction loans, you're generally looking at minimum 10% down for smaller loans. Fannie Mae has a program, a one closed program that does new construction. It's very limited and restricted, and they can do as little as 5% up to a loan around $800,000. But for the most part, you're going to see most banks require at least 10% down on smaller loans. And then just like regular loans, as the loans get bigger and bigger, that down payment will be higher, 10, 20. Once you get over $1 million to $3 million, that's going to go up to 20 or 30%. And down payment is also, inversely the same as equity, right? In many cases, clients will have already purchased the land, and sometimes they purchase it in cash, sometimes they take a lot loan. So they have land equity. So that 10%, they might have equity in that land, and any land equity would count towards whatever down payment or equity requirement for that construction.
Very good. Ed, could you quickly go over what the appraisal process looks like on a home that hasn't been constructed yet?
And that's one area where people will get the perception that construction loans take a long time. And on balance, that's accurate. But the appraisal process is one of the reasons why people believe that, because a construction loan is based on a very specific home, right? Somebody doesn't come to us and say, I want to build an $800,000 home. How much of a loan can I get? When can I close? Just like an appraiser walking into a fully completed home, the appraiser is going to have plans based on that fully completed home. So those plans are going to tell them how big the house is, say 3,000 square feet, how many beds and bath they have, maybe four bedroom, 2.5 bath, how big the rooms are, for example, as well as the things that are being put into it, right? What are the level of upgrades that are being put in there? So the completion of the plans on budget are very, very important in terms of being able to order the appraisal, because you can't close a loan without an appraisal. And on a construction loan, you can't order an appraisal until you have the fully completed plans and budget. So quite often clients will think they have those plans, but they're not fully complete yet. And so that can be some of those things.
Very good. Now, we talked briefly about a draw schedule, but could you give us a behind the scenes look? What is needed at different types of stages during the build project to get this approved?
Yeah, really, for the most part, the draw schedule, really, we defer to the client and the builder. FHA has a construction loan program. It's mostly for rehabs. It's restrictive. A program like that, they have a set schedule on what you can draw, when you can draw it. There's a lot of oversight on those things. But for the most part, the one closed construction loan program, we're going to defer to the client and the builder on how many draws they may take. Now, just as you say that, the number of draws you take will impact the closing costs that the borrower is going to have. Because with every draw that occurs, inspection will be required to make sure that work is done. Construction loans are a reimbursement loan, right? It's not as if the client or the builder can send a note to the bank and say, send us $100,000 for stuff. They're going to put in a draw request for items to be reimbursed for work completed. Now, there are some exceptions on this, deposits for custom items like cabinets and flooring and windows and that sort of thing. All very custom. You can get a 50% deposit. But for the most part, you're going to pay for what is completed. So the number of draws then, generally we'll see 4 to 6 would be maybe 50% of the projects. There are some builders who just hate paperwork, so they may only do a few and they'll self-finance some of it from their own lines, and they want to pay their subs real quick, so they may pay their subs real quick and then get reimbursed later. And then there's some builders that, especially on the larger bills, that just have a monthly billing process. So they may, on a monthly basis, bill every month for whatever's complete. So if it's 12-month build, you got 12 draws there. So from the cost from each draw, you've got an inspection fee and then possibly title fees as well. Title companies in some states, many states, are really involved with each draw, and they tend to build in a certain number of draws into their package. Maybe around 6 is a common number. So if you go over that number, there could be some additional costs on that. Each one of those inspection and title fee inspection draws, those fees are $100, $200, not inconsequential, but it can certainly add up if you've got a lot of inspections and draws that you'll be doing over the course of construction.
That's fantastic information, Ed, and how to save yourself some cost while you're going through the new
construction.
construction
Definitely have
process.
That conversation with your builder. How many draws do you expect? Because in many cases, we're the one telling the client, what their inspection fees are going to be, and they wonder why it's so expensive. And then you have to say, well, the builder wants 18 draws over the next 18 months. So
Yeah.
have a conversation with your builder.
Well, very good. Ed, thank you so much for the information. Before we end the video, I did want to ask you, what would be your best advice for somebody that plans to build a home within the next 6 to 12 months?
I'd probably say 4 things. Number one, don't wait. If you look at the cost to build a home, you look at that chart over the last 30 years, except maybe 2008, it has gone up every year. So there has been times throughout my career where clients have said, especially during COVID, right, when prices really jumped, who have said that, prices have gone up so much, I'm just going to wait till they come down. Well, they won't. Rates will go up and down, but the price of building a home very, very rarely goes down. So the sooner you lock in those prices to build your home, the cheaper it's going to be over the long haul. Second thing is, what a lot of people would say, meet a couple builders, 2-3 builders. For me, it's not about that price. Price with anything in life is important. But for me, the successful projects between homeowner and builder are the ones that you click with upfront. They call you back. I mean, if they're not calling you back when they don't have your business, what are they going to do when they have your business, right? So it's going to be the people that you feel really good about, not necessarily the cheapest, and make sure that you have that trust going into it. Because once you lose trust, that's when things can go sideways during the construction phase. And it can be very disruptive and difficult if you have to change builders midstream, because you may have to get new budget. If that budget goes up, you have to put new money in. Build, depending on the lender you're working with, that builder may need to get approved. So really just take the time, make sure you've got a good builder. In some cases, clients are going back to a builder they worked with before, or somebody, a very close friend or family loved, they click with right away. So, in that sense, if they're satisfied, there's really no sense to seek out other builders as well. Third thing is be patient with that budget. So just as I said in my first point, don't wait a little bit. You want to make sure that you nail the cost down, because I think a lot of times clients will go in, they'll set up a budget, and they'll just put a placeholder for things. Not only the small things like the allowances, things like appliances or cabinetry or something like that, but some of the big things that they'll just put placeholders in. And as I mentioned before, once you close, that $800,000 budget I mentioned, that's locked in. So all of a sudden, you now start looking at a cost of cabinets or the cost of flooring, and all of a sudden, you're 2x of what that placeholder is. You've got to come up with those additional funds. So at least take a little bit of time and go in and see what kind of appliance package you think you may want when putting those placeholders aside. So, and then the fourth thing again is get pre-approved sooner than later. You're going to spend a lot of time. So disappointing if you spent an hour on this building your dream home, and all of a sudden a year later, you could have spent some time doing some things differently a year earlier to get you prepared for it. So for the most part, I think you do those things and you'll be good to go.
Awesome. Thank you so much, Ed, for those great points. I checked out your website that has a bunch of blogs. I read a bunch of blogs that had a great information. I also saw the calculator. Could you please share the contact information for you and your team and the best place to get a hold of you?
Yeah, the website is edcurrie.com, edcurrie.com. Ed at edcurrie.com is best place to reach me via email, and get those, and usually respond within a few hours. Certainly can just answer general questions or whatever anyone needs.
Awesome, Ed. Well, again, thank you so much for joining us today.
Thanks for having me.
Ed nailed it. The biggest lesson for me is that you don't have to be a financial wizard. but you do need the right team and the right structure. For this build, I paid cash for the land, but I am considering working on a construction to perm loan to fund the actual build. Having that flexibility and knowing my draw schedule ahead of time helps me stay on budget and avoid surprises. If you got questions for Ed or you're thinking about building yourself, drop them in the comment section below. In the next episode, I'm walking you through my full architectural design room by room, showing how I'm customizing this build to work for resale and for how I live. If you made it to the end of the video, congratulations. Thank you so much for watching. Consider subscribing, and we'll see you guys next time.